Good afternoon. This is Carlo Mariani. I am the founder of The Property Coach, an independent provider of property education. And welcome to our weekly show, Ask the Property Coach. First of all, thank you to all our property fans that have reached out and sent us a number of questions for me to address during today's show. And please keep the questions coming. We are also live, so feel free to join and to ask questions live on the chat. We are jam-packed with questions, but I will see if I can make a plan for some live questions as well. Thank you very much. Let's get cracking with it. Okay, so let's look at the first question that came through earlier this week. So the first question is, what type of property investment do you prefer in the current market? Wow, that's a great question, and it's also a tough question. First of all, I think there's a couple of things that everybody should look at when deciding on what property investments are going to be performing and outperforming, because that's what we want to do as expert property investors. I think item number one is look at affordability. Affordability for first-time buyers and for people that are going to upgrade is the critical driver of long-term house price growth, and obviously also in terms of rental growth. So I would say, number one, look at affordability, and I certainly see a sweet spot in the 500 to 750,000 rand price range in Gauteng, which remains the economic hub of the country, where property still remains significantly undervalued. So that's one aspect. The second aspect is look at economic growth and look at where places of employment and places of living are going to come together. And I'll give you a couple of tips. Look at the corridors of freedom in the city of Johannesburg. You can go to the website and download some very good documents that will show you where the big investments, the big public investment is gonna happen, which is likely to be supported and eventually backed up by private investment. The corridors of freedom are a 20-year strategy. Align yourself with that strategy. And certainly I remain, because of my personal experience, a great supporter of residential property investment in Johannesburg CBD. I started investing in Johannesburg CBD as early as 2009. And I remember when my friends used to tell me that I was very brave, which means that they were actually meaning that I was a bit silly, not to say something else. The story of the rebirth and the rejuvenation of Johannesburg CBD is nowhere near finished. I think NHFA is still in the early stages. There are massive deals and massive opportunities. So these are a couple of things that I think that you should definitely be looking for as a property investor in Gauteng in particular. Also, I think it's important that you take cognizance of where we are in the cycle of the property market. And it is always a cycle. And historically, it's a 7-year cycle, which is made up of two phases. There's a 5-year sort of like, call it growth or accelerated growth. And there's normally 2 years of, call it consolidation, which in South Africa, normally means growth anything between 0 and 2%. We're still running at a 3% growth, but we're certainly coming towards the end of the consolidation phase. This is an amazing time to buy. There's great deals. It's a buyer's market. And I am convinced, based on my research and my studies and my experience in the trenches, that come second half of 2019, we're going to start to see a very steady, if possibly not impressive, but very steady recovery of the property market, especially in Gauteng. Prices are going to get back in line with inflation, and I think in most cases slightly outperform inflation. So I mean, the time to buy is certainly not now, as we love to say in South Africa. So that hopefully answered the first question that came through earlier this week. Let's look at the second question. Okay, the second question says, what is your research on the impact of expropriation without compensation on the property market telling you, and I would say how we should use that research to make money? So the Property Coach has conducted a survey of 511 respondents across South Africa, across the different provinces, across different genders, and across different age brackets. And the picture that came out was absolutely fascinating. It certainly surprised me against my assumptions, and you know what they say about assumptions. That's why we conducted this survey. And I want to share with you some of these very, very powerful findings, because they are nuggets of gold for you to use in your investment strategy. And we have surveyed both homeowners, property investors, rent payers, and dignified squatters. What do I mean by dignified squatters? Means people that don't pay rent, they probably stay with their parents. So I'm just having a small joke here. And what was fascinating, that 39% of the respondents told us that they will delay any decisions related to their properties until they have more clarity around the scope, the impact, the modalities of expropriation without compensation. Another 9% told us that they want to sell, and they want to sell now before it's too late. So you can see a fascinating picture of a market that has got an element of, call it panic, 10%, that's quite significant, and an element of freeze because a lot of people are feeling frozen, and as a result of that, components of the property market are being frozen. But we do understand and we do know that that market will not stay frozen forever. And when the clarity, one way or the other, is going to come, the market is going to be reopened, and volumes are going to go up. And when volumes go up, prices are going to go up. So certainly, I was fascinated to see that the impact of this debate is a lot more substantial than I originally assumed. It is impacting the perceptions and the psyche of people. And we know that in the short term, the property market is largely driven by emotions and perceptions and sentiment. In the long term, that's not going to be the case. In the long term, the fundamentals of the property market come back to play. And we're not talking about what those fundamentals are, but we know that those fundamentals are very, very supportive of a healthy property market in the next 20 years in South Africa. So that's one aspect of what we learned from the survey that we've conducted as the Property Coach. I will share another sort of useful and important element there. One of the questions we asked was, how do you feel about expropriation without compensation? And 37% of the respondents told us that they believe it's absolutely the right thing to do. And another 30%, they told us that they are mainly in favor of expropriation without compensation, despite the fact they have some reservation. But you can see overall that together, the two of them, 67%, have got an overwhelming support for the implementation in one way or the other of expropriation without compensation. Now, that is another sort of very sort of useful piece of information. And one last sort of like piece of information from our survey is we also asked the respondents to tell us, how is this debate impacting your overall financial decisions, not necessarily just about property, but your overall financial decisions. And 49% of the respondents told us that this debate is impacting their decisions either a great deal or a lot. So again, you can see that as much as I actually believe this was a matter of a lot of noise for no reason, it is having a very significant impact. So hopefully that helps you. And this has been a fascinating survey for us. So that was question number 2. Let's see sort of like what other questions are coming in. Okay, one question says, Carlo, you often refer to avoiding unnecessary mistakes. Please talk to us about one of your biggest mistakes in your investing career in property. Yeah, I think it's very important to understand that I've made many mistakes and I've learned from all of them. Some of them were more expensive, some of them were less expensive. Certainly one of the mistakes that I've done was when between 2006 and 2007, in the heat of what was a very, very sort of like frothy property market at the time, I bought a property off plan in Pietermaritzburg, in a city that I had never set a foot on, which I didn't understand. And this was like a case study. And I bought that property in 2007 and eventually sold it in 2015, some 8 years later, exactly for the same price that I bought it for. And I've got myself to blame for. I didn't do an area research. I actually didn't know how to do an area research. I bought in a city that I didn't know. And I was both greedy and ignorant. And that was a good lesson. And the most important lesson I got out of it was not to blame the person that actually suggested the investment to me, but to take full accountability for my ignorance and my lack of discipline, and to commit myself to never make that mistake again. And I certainly didn't make that specific mistake again. I've made other mistakes. We'll talk about it in the next few weeks. But there was a good example of purchasing without proper due diligence on the city, on the region, on the road, on the developer, on the property, on the rental market, all of them together. Okay, so that was a painful memory for me, but I'm actually looking at it with a smile on my face now. So let's look at another question that came through. This is an excellent one. What advice would you give to a first-time buyer? I love first-time buyers because I really believe they are in so desperate need for help in making what is often one of your, if not the biggest financial decision in your life, and to do it right. And I have many pieces of advice for you. I actually have a whole course on, how to make money with your first home. You can reach out to me at info@thepropertycoach if you want more information about that specific course that I give. I would say let's start with one. First of all is get hold of a bond consultant or a bond originator, a quality, reputable one, as soon as possible, certainly well in advance to when you think you're gonna buy. There's obviously a couple of reasons for doing that. First one is it will give you, or she will give you, a much better idea of what you actually qualify, but it will also give you good advice, free advice on what you need to do, maybe for a period of 1, 2, 3, 4, 6 months, in order to either qualify for a bigger amount or qualify for a better interest rate. So get in contact with those bond people well before, well in advance. Don't wait the last minute. Hopefully You won't find out about the DSTV or Edgar account that you forgot to pay 7 years ago, and those skeletons are going to come out at their own time. So that's one thing that I want, as a strong piece of advice. And what other advice I will give you? Well, I would give you another advice, which is do it. Just do it. Okay? Do it with the right level of preparation. Do it with the right level of education. Do it with the right level of research, but don't delay forever. Don't wait for all the stars to be aligned until the time is perfect, because the time is never perfect. The best time to buy properties was 20 years ago. The second best time to buy property is today or tomorrow, but not next year or in 3 years' time. So do it. Do it with the right level of education. I'm actually going to, I love first-time buyers, so I'm just going to give you another piece of advice, which is beware of buying off-plan, beware of buying new developments, because very often first-time buyers tend to lean towards that type of purchase. There's nothing wrong per se with new developments, other than the fact a lot of you will end up buying off a glossy brochure without asking the questions that need to be asked, without fully understanding what you're buying, and without a commitment by the developer to deliver what they promised you to deliver. So do your due diligence. The other reason why buying off-plan from a new development at this point in time, I believe it's not necessarily or not always a great investment strategy, is because the premium that currently exists between the new stock and old stock is at an all-time high. You're looking at 35-40% premium between buying, let's say, a new sectional title development and a sectional title development which is, let's say, 10 years old, maybe 400 meters away from where you're buying. That is a function largely of ever escalating building costs, because building costs have escalated anything between 6 to 7% per annum for the last 10 years. And also as a function of the fact that because the market is quite soft, the gap increases, and when the market becomes more healthy, then the premium reduces. At this point in time, the premium is at an all-time high, so you're paying a lot for the fact that you're walking into a bathroom that has never been used, or a kitchen that has never seen a pot. So bear those two things in mind, bear those elements in mind before you make a decision whether you want to buy off-plan or whether you want to buy existing stock. So those are hopefully some powerful advices for you, the first-time buyer. Having said so, I think a lot of this advice does apply to people buying investment properties or upgrading from an existing property to a bigger property. Right, so let's see what else is coming through. Okay, there's another question coming through that says, you often talk about fast-tracking your property success. What is the most important thing that I should do in order to fast-track my property success? Again, thank you. This is an excellent question, and a question that could afford or should afford like a whole one day session. By the way, if you are enjoying this session and you want to invest further in yourself, visit us at www.thepropertycoach.co.za. We have some amazing events happening in the next few weeks, and I'd love to see you. Then. But let's go back to the question: what should you do in order to fast track your property success? Well, there's many things you should do and must do. I'm going to cherry pick on a few that I particularly love. The first one is certainly you must use debt aggressively especially in the early stages of your wealth generation. If you're not going to use debt, and when I say debt, I'm not talking about going to a bank, taking a 27% loan and going to spend it on shoes. That's not good debt. I'm talking about debt that is paid by somebody else, namely, in most cases, the tenant. You got to use debt because that is going to be your hormone growth, your growth hormone for your wealth. And I certainly remember those days where I was 97.5% geared on my properties. And that certainly served me very well to accelerate growth and to have money working for me, because you're going to get wealthy having money working for you rather than you working for money. And debt and financial leverage is give you that. I'm always talking to my students, says, how do you think banks make money? Do you think banks have got debt? And a lot of people say, no, of course banks don't have debt. Of course they do. They've got mountains, billions of debt, but they make that debt work for them. Same way as you will make your debt work for you in your financial property investments. So that's number one. The second one is, if you want to fast track your property success, especially in this current market, but in any market, you gotta buy below market value, because buying below market value is going to be a massive accelerator for you. It allows you to have exit strategies, refinance strategies, trading strategies, income strategies that are on a different level than if you buy at full market value, not to mention if you buy above market value. Challenge is a lot of people don't know what market value is. They use the estate agents to tell them so. And that is a terrible point of departure. So buy below market value. In this current market, you should simply refuse to buy anything for less than 15% below market value. The deals are out there. You know, if you want to know how to get some of those deals and what are the techniques and strategies that work, come to our website. You'll see there's an event scheduled for the 21st of November in Centon at 6 p.m. It's called Buy Below Market Value Masterclass. You can go to Quicket and search under Buy Below Market Value, and you'll see our event is 99 Rand. It's ridiculously priced. Come and attend the session. And you want to fast track your property success? You know I have to say that because I'm Carlo, founder of The Property Coach, but get a coach, get support. You don't have to make all the mistakes. A lot of those mistakes, if not all of those mistakes, have already been made by somebody, somewhere. Fast track your property success means doing some mistakes, but not all of them, and not the ones that are going to kill you or sort of nearly kill you, because that is going to tremendously slow you down. So I think that we have covered some very, very powerful questions. And I want to thank all our property fans for engaging with us over the last few days and submitting all your questions. And I want to say thank you, and keep the questions coming for next Friday, same time, 12:30. And we are also going to be streaming live on YouTube from next week. So if you prefer that format, that will be great. And send us your questions to info@thepropertycoach.co.za. You can use the same email. I repeat, info@thepropertycoach.co.za. If you want to discuss with us how we can fast track your property success and take your game to the next level. Until then, have a great weekend. Thank you very much.